Time for everyone's favorite market review, because markets are crazy and Trump keeps making them crazier with all his tweets about Mexico and whatever else he's going to tweet about. And of course, to help us out, as always, we are going to turn to Alex, the smartest macro guy in the land. He breaks down the market like no one else does. And you know I love covering these market briefs because they are just so good. Check it out. This is the S&P. When markets were right here, this candle right here, Alex released a report saying that bullish sentiment was stretched and that the market was too complacent, which he was saying was a sign that things might be turning around. Then he released another report right here saying that he's lightening up and looking how he can get short. See, the second market brief was noting the official sell signal, which was triggered. And right after that brief, the market did collapse. And on this candle right here, he published the MIR, which is another report, the macro intelligence report, which said we're headed for a broader market correction in the coming weeks. So time and time again with these reports, Alex is right. He uses what's called the Marcus trifecta after Michael Marcus. And you should know Michael Marcus because we just did that video series on him, which if you didn't see, I'll link to right here. But the Marcus trifecta involves analyzing technicals, fundamentals, and sentiment. And you know that's exactly what we do in all of these videos. And you can see right here, it's been pretty effective. And this is the reason why Alex is our head researcher and trader at Macro Ops. And it's why most of our clients at Macro Ops are professionals, hedge fund managers managing millions, tens of millions, even billions of dollars. They all come to Alex to see what his macro view is, which you especially need to know when you're managing that much money. Now, I usually cover a portion of these market briefs, as I always mention in these market reviews. And the full market brief actually goes out to the members of our Macro Ops collective. So in that group, that's where all the hedge funds are and the professional traders. It's really cool because you get all of Alex's research. Plus, we got a whole Slack channel where all these guys are talking to each other, all these professionals. And they're going back and forth talking about markets and learning constantly. Now, there's a lot more to the Macro Ops collective. I'm not going to explain it all here. But another thing, access to that collective only opens up periodically, only once in a while. And actually starting next week, access is going to open up again. Now, you should only be checking out the Macro Ops collective if you're a serious advanced trader. If you're a beginner, that's not really for you. Unless you're a beginner that has decided you're going to dedicate your entire life to markets. Because it's that serious. That's the level that these guys are in the collective. They're doing this full time. They eat, sleep, and breathe markets. And it's very advanced stuff. And actually, if you want a taste of what goes on inside of the collective, I'm going to put a link to the Macro Ops website right up above here and down below in the description and comments. And if you go to the homepage, you'll see that we've got an advanced liquidity webinar and course for free if you just put your name and email into this box right here. Now, we made videos before about how important liquidity is and how it's the most important fundamental when it comes to the market. It's one of the key things we look at in that Marcus trifecta I just described to you. It's the fundamental part. So in this little mini course webinar, Alex takes you through exactly how he does it. All the charts he looks at, all the data, how to interpret it. And honestly, I don't know why this is free. It wasn't free before, and I'm not sure why it's free right now. I need to talk to Tyler about this because we should at least be charging $1,000 to get this information. This is stuff you're not going to find anywhere else. It's very advanced. So yeah, I think we're definitely going to change this. This isn't going to be free for much longer, but I'm going to go put a link to that up above and down below. Check it out, sign up. You'll get the whole thing for free. And you can see if that's kind of your flavor and you really dig the stuff that Alex is talking about, then you are going to love the collective. And if you hate that stuff when you're going through it or it bores you to sleep, well then, you know, the collective is not for you. And once you sign up for that webinar, we'll send you more information about the collective next week. I think it opens next week. But yeah, if you want to trade alongside real professionals like Alex and Macro Ops and the rest of the people in our community, which is the same community I pull all this stuff from to give to you guys, then definitely go to the website, check it out. But okay, back to the market update. So multiple markets are now oversold. This is the S&P right here, and you can see that it was hitting that support line, and we kind of expected it to bounce until Trump started tweeting about Mexico. And this support line is the 200-day moving average, this blue line right here. Now, of course, these lines are not perfect. And I'm recording this at 2 p.m. on Friday. So we'll see what happens at the end of the day, because really the price action at the end of the week, at the end of the day on Friday is the most important. So we might see the S&P dump even lower, or maybe it'll rebound. Like I said, these support lines aren't perfect. It might just trade around here. And on Alex's version right here, and this was published May 29th, so it's a few days old, the S&P is also bouncing off its Bollinger Band, which was right here. I think it's probably past that right now, but the same thing was happening in the small caps and IWM, still bouncing off the Bollinger Band. And then of course you want to look at high yield credit, the junk bonds, because that kind of gives you a signal of risk on or risk off. That also was pushing up against this Bollinger Band, which it probably sliced through now. So Alex expected to bounce over the next few days, which still might happen. We'll see if Trump tweets anymore, but he's saying that bounce should be sold into and not bought, which is the same thing he said about about this bounce right here. If you guys remember, I released a video right around here too, going off his report. And in those previous videos, one of the things we looked at was the percent of stocks trading above their 50-day moving average. And Alex explained that the sell-off would likely continue until the market hit more oversold levels. And the oversold level is if this line hit this green spot right here, because that would mean that the percentage of stocks trading above their 50-day moving average was near the 20% level, so very low. It's basically like a breath indicator. And that few stocks doing well is a good signal of a short-term bottom, but we haven't hit that. You see, we still got some ways to go. And then we got long-term indicators of sentiment like this AAII bull bear chart, and you can see that they're still elevated. So again, how sentiment works is that you want people to be super bearish because that's good for the market. That means people have their money out and can still put it back in. The problem is when everyone is bullish, because then who's left to keep buying? Everyone's already in. So that's a signal. When people are getting too bullish, you can expect the market might turn around. So you can see in this chart, the yellow line, this is a short-term indicator, this AAII bull bear, and it is going lower. But the longer term ones, like the investors intelligence sentiment, you can see where the yellow line is, it's still elevated. So we need the longer term ones to come down too, meaning people getting bearish again. Here's another way to look at that same data. The red line are the bears and the green line are the bulls. You can see that there's a lot more bullish people than bearish people right now. You need the opposite for the bottom to come. And then you can look at the extreme exposure index, and you can see that this yellow line has pulled back from its extreme reading recently, meaning people were overexposed, had all their cash in, and again, not good for the market because who's left to buy? Well, that's coming back down, but you need it to go down past the 40 level before you can expect a bottom to be in. So we're not there yet, which again lends to why Alex thinks the market is going to continue lower from here. Another interesting thing to look at is semiconductors, and they're the black line in this chart right here. They've been leading this entire move lower. And if you remember in my past videos, I was talking about companies like Qualcomm. All these chip makers were getting hit by these tariffs from Trump, and the fact that they are now banned from supplying Huawei, which is the Chinese company that's like the second largest producer of smartphones. They got a lot of chip demand, which was cut off. Now semiconductors are still falling hard, so you need this black line to turn around and for them to find a bottom before the rest of the market does, because this market is really a tech-led market and semiconductors are a really important part of that. So in summary, long-term indicators point to more downside and volatility in the weeks ahead. Sentiment and positioning are still too bullish and valuations too high considering the slower growth regime we're transitioning to. So Alex has also been talking about, which I haven't covered, that consensus earnings estimates are way too optimistic going into the second half of the year. That's another way to look at sentiment. And this market volatility should help reset these expectations lower in the coming weeks. So this sell-off is likely to play out until the popular narrative reaches bearish extremes, similar to those we experienced at the beginning of the year. But until we reach that point, it's a good idea to keep risk light and look for opportunities to get short if possible. So his downside target on the S&P is 2600 to 2650, which is right around here. As you can see, that is still some ways to go, over another 5% from today's levels. So expect the market to keep falling and adjust accordingly. Or if you're trading a system, don't adjust at all, just keep following the system. Now I go over these market briefs, but I go over them very briefly, get it? Like I said, if you're interested in the collective and going deeper with Alex and all the professionals we have in that collective group, then definitely check out the Macro Ops homepage, because this is where you could sign up for that advanced liquidity course webinar. And you can see if this Macro Ops stuff is your flavor. Remember, it's really geared towards advanced traders and investors. This isn't for beginners. So the link is up above and I'll put it down below too. Definitely check it out. And if you haven't already, make sure you subscribe to this channel and hit that notification bell so you get an email notification when our future videos come out, because we're publishing every single day all about markets and business. So subscribe and I will see you in the next video. Stay fallible out there. Bye.